Hello, what's up, guys? Today I want us to look at the market structure, and the market has three types of structure. You'll see most of the time you'll see the market pushing to the upside, and this is what we call the uptrend. There's another scenario whereby you'll see the market creating almost relatively equal highs and lows. This is called the ranging market. Ranging market. Then, thirdly, we have what we call the bearish market, whereby the market will be pushing to the downside, right? Something like this. This is what we call the downtrend. All right, downtrend. So here, whenever you're looking at this market, your interest is to find a zone where you can go in, either to go long or go short. So when you look at this market structure, we want to make sure if the price is pushing higher, what are we looking at? All right. We're going to look at things like pullbacks, which creates what we call inducement. And what I mean by this is that if the market is pushing higher, it creates the first pullback and goes higher and break the structure, probably most traders, this is where they'll put their stop loss here. And if this is where they are going to put their stop loss, then there's 100% chances that this law contain what we call liquidity. Remember, you don't want to be liquidity, but you want to go in a trade or in a position whereby there's no liquidity. So this means that when you have a zone like this, you want to at least stay out of the market, let the price take out that low, then you can look for an entry and buy if you're looking for a bullish move. This is the first scenario that we'll see on the market, and this low, most of the time, we consider this low as an area of liquidity, which we call inducement, and we prefer the market taking out this low. If this low is taken out, then we will prefer to wait for the price to come lower, take out the inducement, then we can look for a buy to the upside. So this low, it has liquidity. There's a scenario whereby you'll find again the price pushing higher, creating a pullback there. Then between this high and this low, you create something like this and go higher and break the structure. So here again, most people get confused when they face a scenario like this because they look at this one as an inducement, right? They look at this low as an inducement or a liquidity like that, and they want to find a demand zone below this zone. And when you want to find a demand zone below this zone, you realize that market will still come, take out the inducement, react on that demand, and still take out that low, and eventually push higher. So this means that this low again is also a liquidity because look at this. The main move of the market is a high, the pullback, and price went up. So this one here is an internal structure that doesn't have even an impact, but the main liquidity is from this low because that's the low that initiated the entire move to the upside, and this is your correct inducement. That you should wait for it to be taken out because that level, remember, it has pushed the price away. And if it has pushed the price away, this means that this low is very weak and it has liquidity, and most of the time the market will even come lower and sweep this level, and go to the upside. So you want to wait for the price to take out this low. So you can see on the market structure, we are looking at liquidity first. Don't start by marking the break of structure like this is a boss or this one. No. First identify the pullback, then look at that pullback, how the price has moved. Then there's the third scenario where the market will do this, create something like this, and here, and there, and it goes up like that. When you see something like this low, you see this low that started the entire move. This is your liquidity. all right? This law is the main law of liquidity. This means that for you to be safe, let the price go lower, collect all this money here, then start looking for a buy to the upside. So this means that in a proper structure, market structure, we want to have something like this, that if the price is pushing higher, that want to wait for it to create a pullback. We know that the price can create something in between this and this low to confuse you with this one as an inducement. But the best way is that when the price goes up, right, before you identify the break of structure, I have to make sure that this is our inducement, the main inducement, and this is just part of that inducement. You can look at it as a liquidity, yeah. And this means that for proper level, we want to see to wait for the price to drop and go lower. Once we take out this level, then we confirm our high, then price will still do this and go to the upside. So you end up having something like this. It is the inducement. When inducement is taken out, that's when you confirm your high. And when the price breaks the structure like this, then you have a good break of structure. And because that level, the high has been broken, look at this, the price went higher, market was pushing higher, created the pullback, price went higher, came lower, and created a pullback and went higher. So this means that this was the inducement that was taken out because this low led to the break of structure. So this means that according to this market, once you have that break of structure there, then this is the confirmed low that is protected. And if the market breaks that low, this means that you have a change of character and the price is going to do what? To move to the downside. So that's how you're looking at the zone. So let's say that you have this. This becomes your new inducement because in this structure between this low and this high, this is only pullback that has pushed price low up, I mean, and previously this level had already collected liquidity. So you don't have liquidity on this low. So the liquidity is on this one and price went higher. So whenever you're looking at a zone, then you want to make sure that this area, sorry, this area is the inducement. This one is the inducement, and you have to wait for price drop, right? Because there's always a demand, so price will always attempt to buy and fail, go lower, takes out the liquidity. The moment the inducement is taken out, that's when you confirm your high, and you let the price again push to the upside, and this means that this is the high confirmed because the inducement was taken out, and this is your new break of structure. This will be the new break of structure. So if that's the new break of structure, then definitely this is your protected low, because this low already did what? Already took out liquidity on the left, and right now this low is now clean. And again, the market will keep doing the same thing, that this becomes your new inducement like that. And if by any chance price will always react here because there's a demand, react here, and price will go lower and break that particular low. If it breaks this low that is protected, this one will say that we have a change of character here. We have a change of character here. And when we have a change of character here, this means that your high is confirmed, but the price now bearish because the protected low has been taken out, and the only inducement that we have is this one, that we cannot look for sales until either the price takes out this inducement or by any chance creates a new inducement, for example, something like this, and goes lower. If it creates something like this, okay, your inducement, remember, I've said that this, you can move your inducement here, and this still a liquidity part unless this level has also swept liquidity. For example, what I mean is this. Maybe we have something like this here. Let me show you. Maybe we have a candle. And we have another candle next to it. And here, maybe we have something like this, a longer candle, and this candle that is here, it has swept this candle like that. Right? If we have a sweep like that, then the price, if it comes to the upside, that and that's how the inducement can reach here and go to the downside. But if not so, it's likely to even take out that high and still continue dropping to the downside. Continue dropping to the downside. And again, this will be a low because the inducement here has been taken out. And again, you get a new break of structure. Boss. Once you have this boss here, market will again give you a new inducement, try to go higher and fail. So when it fails, then this becomes the inducement, price takes out the inducement and pushes to the downside. This inducement, and this is your lower low, this is your lower high, and you get a new break structure here, boss here. So let's do this practically in the market and be able to see how we can be able to identify the market structure using the correct market structure rules. So this is a Euro USD, and I'll go to a little bit higher time frame. Let's say that I go to daily. Let's use daily. Let's use daily today. Allow me to get rid of this. So on this market, we look at this, and most of the time when you're doing your analysis, always look at the market. If the price is bullish, then it's bearish, and you want to analyze this dropping part, let's start from here, be able to see that shift on the market structure, then be able to follow it through. It will be easier. And if the market is bullish, let's say that the price was selling, then it's bullish. For you to get to see this part properly, to get to see the proper structure, you can start from here so that you can get to see the change of character, then you can be able to follow through. So here, I'm going to use daily time frame, and you can see this market has been dropping, and I want to analyze this move that's going higher. But before that, I want to make sure that I'm seeing, you can say I want to analyze this bullish move, but I want to start from this other end where it's been selling, or let's say that I want to analyze this selling part of the price. So I want to start from the bullish move so that I can be able to locate the proper change of character. So this means that I have to zoom in a little bit clear. And when I zoom in, I'll be able to look at the market, the high and the low, the nearby high and the low, so that I can be able to locate the pullback. This is a high, this is a low. Then this area, because if this is a high, then it must have, remember what I've said earlier, that you have to identify first the inducement and wait for the price to take out the inducement, then confirm your high, then price goes higher, break the structure, then you confirm your low. So here, if I have that high and the low, I can see according to this market structure, this is the first pullback, the second, the third. See, this is the last low that pushed the price higher, which is my inducement, but the low started from here. If I zoom in clear, you're going to see that here, this is where the price started meandering. Though this is a correct inducement, but this is a liquidity, because any equal lows, relatively equal lows contain liquidity. This is like sort of a trend line liquidity, as you can see, sort of a trend line liquidity. So for me, I like just concluding like that as the liquidity, but this is a valid inducement, the low that pushed the price higher. Here, this is the inducement here. That's the inducement, and if the inducement is taken out, then my high is confirmed. Then if the price closes above there, then my low is confirmed. Look at that, break of structure. And this is my low because market came all the way to this low before pushing to the upside. Now, once I have this, then definitely I want to identify the next inducement and look at this market structure. See, price been going up, and here. So this is my inducement, but definitely this is also my liquidity level. So here, this means that this is the last, look at this. I was saying that if price creates something like this, so many liquidity levels, this is your correct inducement, but this is also a liquidity level. So price can take out inducement and go for the liquidity, the downside, before going up. So according to this is the correct inducement here, right? Correct inducement. And if inducement is taken out, is a high. But one thing that we have is that the rules is that the price should not violate this law, because this is a protected law, that if it gets taken out, we get what we call a change of character, because this is a law that has pushed the price away. Look at this price came to this law and went away. So if price takes out this law, then this means that we have a change of character here. So let's see what happened. Price. And again, if price wants to give us a continuation, it should go up and break that high and give us a new break of structure. So let's see what happened here. Okay, price, if you look at this level, price went lower and broke that structure. So here we have a change of character. This means that the market has shifted to the downside, and now we are not interested to look for a buy and only look for inducement and continue looking for sells. But if the price goes high and break that structure, we'll have a new change of character. So look at this area. Look at this. You can see price when it was dropping, that, and went lower. So this is your inducement here. Price, look at this inducement. If inducement is taken out, this is your lower low, this is your lower high. Price break this structure. That means that that's the boss, and this is a protected high. So this high should not be violated. If the price violates that high, we get a change of character. So here, the moment market has broken the structure, what we want to see is to look for a new inducement and look at this price from here, first pullback, the next one, then to the downside. This is our inducement here. So this is our inducement. If the price takes out this inducement, our law is confirmed. So that inducement being taken out, this is our lower low. And price, if it closes above there, we have a change of character to the upside. So let's see. Price instead, it did go down and break this particular structure, as you can see here. So if this structure is broken, then this means that this is our protected high. The market should not close up there. This means that this is a low, this is a high, and price went like that to the downside. But we can see into this structure, price did this and this. So here we have a new inducement, which is here. A new inducement that is here. So here, once we have this inducement, this is our confirmed low. And if the price closes above here with the candle, closes, listen, I've said closes up here, we'll get a change of character. But if you look at this, these are wicks, and what we can see here, let me zoom in a little bit clear. We can see here we have a sweep of liquidity. This is just a sweep of liquidity. So having that sweep, then this means that here, price just handled the liquidity, because remember I told you that every high or low contains stop loss and price went higher. We collect whatever was there. So what we can do is that you're going to do what we call structure transfer. We'll transfer this break of structure to here, that. Okay, but let me do this. Let me do this. Okay, we'll do we will wait for price to break this structure. We'll wait for price to break this structure and close with the candle. Okay, let's see. Okay, closing the candle now. We have that, but the price already, the market has struck this high. So what we can do here is that I'll transfer this high to here. This one, if price will go up, we'll expect it to be change of character, but since the price has gone low, so this is a protected high, and this is now removed, and this low is now removed, and the structure now our market structure looks like this. But low, price went high, collected major inducement, but dropped to the downside. So you can see from here again, we want to look for a new inducement, and according to this, our new inducement will be here. The new inducement will be here. So if price can go up and take out this high, like this, then we can do what we can sell. So let's see what happened. Okay, price has failed to go higher. So what we can do here is that the price, once it breaks this low here, then we have to look for a new inducement. So since this low has been broken, our inducement will come here. Here. So if the price can, the market can take out this inducement, then we prepare to continue looking for sales. See? Okay. We'll zoom in a little bit more. Let's see if this inducement was taken out. As you can see here, this is the inducement taken out. So if the inducement is taken out, then probably the low is confirmed. Where's the low? The main low here is this one. And when the price closes below there, that we get a new break of structure. And once we have a new break of structure, we need to look for the new inducement. And there's a new inducement here. We have valid pullback, but this pullback will be okay if the price goes lower and break this candle. So as for now, my inducement is still okay. I don't have an inducement, so let me see. Okay, this is not an inducement. That's not an inducement. I want to see this low being broken first for me to get an inducement because I need a valid pullback. Okay, right there. So you can see here price went lower, went high, and dropped. So this is my inducement here. This means that this is my inducement. And if the price goes higher, market goes up and break that level, then you get a nice drop to the downside. So let's see. Okay, nice. Now the market has taken out this inducement. Once this inducement has been taken out, now our low is confirmed. Our low is confirmed. And if the market goes lower now and break that structure, we confirm our high. And this will be the continuation to the downside. And see market seems went into this order block there. So let's see. Okay, nice. So if we get this, then this is our confirmed high. Once we have that confirmed high, we need to identify a new inducement. And according to this market structures where the price is, this is the first pullback. Look at this. It's a pullback to the downside. Sorry. Pullback to the downside, which means that this is a inducement here. Price takes out that high. Then we look for a sell. So let's see what happens. Okay, price created a new inducement. Sorry for that. Cut. Yeah. If we look at this one here, we have a valid pullback here. Small, minor. High, then the low. So this was also a small pullback. So this is an inducement as well. The price goes higher, takes out that inducement. The low is confirmed now. And the next thing that we'll want to see is for price to go down and break this structure so that the high can be confirmed. So let's see what happened. Price is still bearish. Okay, let's see, do we get a break of structure here? Yes, that's a very nice break of structure. Once you get that, you confirmed your high. And if this low get broken, we identify a new inducement. This low get broken, but as for now, our new inducement is this one. Let's see. If price breaks this low, then we have to transfer inducement from here. So, okay, this now confirmed. So our new inducement is this one. And if the price goes above that inducement, then we look for a sell again. Okay, price taking out that high is now our low, and we want to get a new record structure here. That's a continuation to the downside. Yes, let's see. Okay, price breaks that low. You can see that, and this is your high here. And your new inducement according to this market structure is this one. We take out that particular pullback, then you look for sell again. Okay, price playing around. Okay, now that area is taken out, and this is your lower low. And if price breaks this level, you get a continuation to the downside. So let's see what happened. And if we break above this high, we close above that high, that means that you have a shift in the market, and that will be your change of character. Okay, price has closed up there. So the price has closed up there. This means that this was our shift, change of character, and this means that we should prepare to look for buy. And where's our new inducement? Our new inducement is here. Look at this. Right, the first pullback, second pullback, that pullback. If price takes out this low, we prepare to buy, but price can hunt even this entire low here. So let's see what is happening here. That's our inducement. We get taken out to look for sales, buys, I mean. Okay, price created a new inducement, which is this one. Wait. Okay. So we have a new inducement. New inducement taken out, then you confirm your high. So now if that inducement has been taken out our high, but this low remain to be the permanent low. So let's see. Okay, price goes higher and breaks this structure, which is a BOS, which confirms that this is our continuation to the upside, and this is our protected low here. Sorry, protected low here. And if the market, look at this, the first feedback, this is internal, next one. So if price takes out this inducement, this low, we continue looking for a long position, a buy, this particular low here. And price has a room to come even past that area. Okay.